joins us from our Abuja studio. Mr. Demese, good morning and welcome to the program.
Morning, Ini, and thanks a lot for inviting me. And I hope you're doing well over there in Lagos.
Yes, we are. Thank you so much. I trust you're doing same. So we're discussing Zenith now. We've seen a lot of impressive numbers coming from Zenith as well as other banks. We saw that the profits is really looking good, the revenue looking good. I think the first thing that people will ask is, where did the FX losses go to for 2024?
Where did what?
Sorry, the FX losses, FX. You know, we had a lot of FX losses recorded.
Okay, FX losses.
Yeah, we don't seem to see it in the books of a lot of banks.
All right. Of course, you know, usually you have the top line of a bank, and then you have the middle line where the expenses, some impairments, and so on, are located. I also saw that of Zenith. But what matters a whole lot in the end is, by the time you take care of your cost of doing business, impairments and other charges, what is your bottom line? So taking it from the top line, Zenith has continued to show very strong leadership in the financial services sector, not just in Nigeria, but the rest of Africa. And in fact, even in the operations in the UK, UAE, China, and even now France, with branches coming up, or subsidiaries coming up in Senegal and Cote d'Ivoire. If you look at their figures, you see a very impressive growth, in their gross earnings. That's the very topmost line in every bank. 3.9 trillion is not a small figure, and that is driven by 138% or increase in their interest income, net interest income, or what you call net interest margin, or otherwise net revenue from fund, which is a very strong showing, that the bank is involved in proper financial intermediation in the economy, collecting deposits from the surplus sector and giving different kinds of loans to the economy. So to drive interest income, to the extent of 130-something% increase means that the bank is deeply rooted in core commercial banking, retail banking, SME banking in Nigeria. And of course, non-interest income also grew, by over 20%, giving you a very impressive 67% growth in the bank PBT. Now, I've talked about top line. The midline is where you see all of those FX loss charges, impairments on loans, and so on. And then the bottom line also had a very strong showing. You can imagine a growth from about 790 billion in PBT to 1.3 trillion, about the largest, the most profitable bank, currently in Nigeria. 1.3 trillion. If you compare that to figures we talk about in Nigeria revenue, it's a very significant part of the Nigerian economy. And this bank, in the past year, paid the federal government of Nigeria over 300 billion in taxes. Imagine that. So if you have a few Zenith banks in Nigeria, it means that our fiscal challenges in Nigeria will be well solved. This bank is providing solution not just to Nigeria, but the whole of the economy. They provide solid loans to the commercial banking sector, SME retail sector, helping even agriculture to grow, to provide food and so on. The data are so impressive. And taking it from the interest income, like I mentioned, it means that the bank is doing core banking business, not just arbitraging, through the treasury activities, buying and selling of, fixed income securities, FX, bonds, and the rest of that. And they're also doing very well there. If you look at that line, they posted over 1 trillion on that line. But the point is that while they do that part, because banks actually do two major businesses, banking business, that's deposit and lending, and also trading business, trading in all approved money market and other fixed income instruments. So Zenith Bank is showing great leadership in the banking sector in Nigeria. Of course, the bank, is the most capitalized bank by Tier 1 capital in the country. Having about 3.2 trillion capital and overall shareholders fund or shareholders equity of 4 trillion. And this is compared to the minimum capital requirement of 500 billion now required by central bank, ahead of March 2026. Currently, what they need to operate as an international bank is 50 billion, and they're having 4 trillion. So it's a forward-looking bank with a very strong showing in all parameters, financial and non-financial. As we go on, I will roll out a few more financial and non-financial information about the bank, because for you to analyze the banking sector, you must speak along CAMEL, capital adequacy of the bank, asset quality of the bank, management efficiency and capability, stability of management and all of that. And the bank's earnings, I've just dealt with their earnings capability, overwhelming capability in their earnings, and of course, increasing liquidity, looking at the bank's recent strong show in their capital raising, achieving over 160% response from investors in their recent capitalization, which CBN mandated that all banks must go through. Why did they have to raise more capital? Looking at the CBN's requirement, because CBN insisted that the capital must be, core. Can you hear me, Ini?
Yes, I can hear you. I just wanted to ask about the loans, because there's been conversation about how difficult it's become for banks to actually get very active in the area of loans because of the CRR, which is at around about at 50%. How has Zenith Bank been able to manage that part of its operations?
All right, banks must be very technically sound to understand the environment where they operate. Nigeria is a very tough environment to do banking business. Like you mentioned, because we've been grappling with very intense inflation, the central bank, in their effort to rein in inflation, has continued to raise rates. The MPR has moved over 800 or 900 basis points to now 27.5%. Moving rates up. Even the central bank instruments have all gone up. And then the CRR, the cash reserve requirement, which means that out of Zenith Bank's over 20 trillion in deposits, almost half of that, theoretically though, should be in central bank as CRR, sterilized, not available for business. So that has actually led to general increase in interest rates in the banking sector as a whole. Of course, Zenith Bank, having a very strong treasury, also had to reprice their loans. So without repricing, they had marginal, a great advantage in their interest income. And of course, CBN also gave some other technical leeways for banks to escape the CRR. People may not understand that, but when you look at it, you find that if you can, if you're very strong in retail banking, giving loans to SMB and so on, there are ways you can leverage even your CRR. That's the reserve fund in the central bank's reserve account. You can leverage on that to give loans that support the economy in agriculture, SME, and so on. And trust Zenith Bank, they use all of those opportunities to ramp up their lending to the real sector of the economy, helping agriculture and other non-oil sectors, to grow. And by the way, they're also very, very strong in the oil and gas sector, leading the way in lending to key performance in that sector, both IOCs and our own local operators like Wando and the rest of them. And this bank boasts of more than 35 million, about 34.5 million customer base in Nigeria and the rest of the sub-Saharan Africa, and of course elsewhere around the world. It's a bank to watch for the future, giving value. And when we come down to management level, I will show you other non-financial performance of Zenith Bank, running on sustainability with all manner of awards. I can't stay here listing all the awards, both from the local award givers, the global award givers, world finance institutions, and so on. So it's a well-awarded bank. The list of awards, if you go to their website, is innumerable. You can't mention them. Best bank, bank of the year, best in technology, best in all kinds of parameters. So it's a bank to watch, and it's a bank to take a position, for the future.
All right, so I think another thing that Zenith Bank seems to be really active is this the environment and social and governance category. We've seen them get also some awards from there, and they continuously say that, well, they are committed to it. Perhaps you can share with us some of their strategies and achievements in that area.
Okay, now let me take the issue of management. Zenith Bank has a team of long-standing, very well-respected management, led by the chairman, Jim Ovia, who is a very big legend in the banking sector beyond Africa. And of course, our dear, very charming, adorable, and beautiful, and intelligent CEO, Dame Dr. Adora Umeoji. And a whole lot of people, both the independent directors, executive, and so on. And then if you drill down, even in that board, you have over 30% of women, showing that Zenith Bank is a bank that wants to empower people, including women. You know, I'm talking about sustainability now. I'm getting to ES and G. Okay, so you look at that, even in their staff strength, I understand that more than 50% or about 51% of their staff are also women. You know, very well motivated, very well paid, very well trained, and so on. And the top management from AGM and above are also over 32% women. So Zenith Bank is a sustainability thinking bank. If you look at the Nigerian sustainable banking principles, which all the banks signed in 2012, Zenith Bank has led, you know, the performance of that principle in several, you know, what do you call them again, pillars. If you look at the pillar of ES and G that you asked me, that's environmental, social, governance. You find that the bank is also leading, both in their report to CBN and in their activities in trying to promote the environment. Even in their lending activities, you know, the report I read about a year ago when I did a consultancy job on that ESG for a client, you find that Zenith Bank, you know, looks at their loans to ensure that they are environmentally sustainable, because there's no business that can go on in a dead planet. So the bank is consciously working towards ensuring that the planet is good, even while we do business, you know. So in their loan activities, they look at environmental sustainability and their compliance in that area. Social governance, you know, building women, creating prosperity in the environment, giving loans to agriculture and so on to improve, you know, economic prosperity and minimize poverty. They are very big in that area. And of course, looking at gas emission, energy usage and so on, the bank has made so much investment to ensure that they approach net zero banking position as much as possible. It's also a member of the UNEP, FI, that's the United Nations Environment Program Finance Initiative. They are driving leadership in that sector, spending money to ensure that, you know, less emission of gases and all kinds of, environmentally damaging impact are lessened by the bank. So the bank is a forward-looking bank using innovation and technology to drive performance. You know, building, very strong architecture for digital banking solutions and all the products that will, enable the environment survive. Ensuring that staff, are not always driving around, moving staff together in the buses and other activities, minimizing meetings, physical meetings to reduce the amount of carbon dioxide that we, and that's where business is going to. At some point in the near future, you won't be able to access some on-lending facility from the likes of, international finance, bodies if you're not a net zero or an approaching net zero bank. And Zenith Bank has seen into the future, and they're doing everything possible to be sure that they represent Nigeria and Africa when it comes to sustainable banking. Whether it's about environmental sustainability, social governance, or empowering women, education and training, and all of those areas, the pillars guiding principles of responsible banking.
And talking about forward-looking, what's the strategy? We have many banks. How can Zenith Bank stand out, talking about strategic growth at this time?
Zenith Bank was established sometime in 1990. And that's how many years now, right? Help me. That's about 34, 35 years. The bank has been growing, sustainably, consistently in all parameters, financial and non-financial. I've given you quite a few. I've only rolled out the figures for last year, but if you look at these years of operation, the bank has consistently grown in every parameter. Why their branches are still around 400, above 400 branches, is because now emphasis around the world is now going towards less of banking hall footprint. That's brick and mortar banking. The bank is now leading, the pack in agency banking and all other digital solutions because, as you are aware, when people had some little glitch in the services, they were not aware that the bank was, working under the background to, build a very robust architecture for the banking software. Looking at the fact that they're now moving, into the African market much more than ever before. I expect that in a few months or years, we'll begin to see their footprint in East Africa and, of course, Southern Africa. They are trying to dominate, West Africa, which they have almost done right now. Vision is stage by stage. I see Zenith Bank now doing a whole lot in East Africa, Southern Africa, and maybe, the North Africa, where they work more with the Middle East. So the bank has always been strategic, having a crop of leaders who are always thinking ahead and who have also found the grace to stay over 20, 30 years in the bank. There is some kind of stability in the banking, in their staffing, both lower management, middle management, and top management, showing you that they are able to run their thing in the foreseeable future. If you also watch, you find that there's low attrition there, and over the years the bank has elected or appointed MDs successively, even from within themselves, showing you a very strong succession planning in the bank. So if you look at all these parameters and all the strategies they adopt, both in their banking products development, in their trading activities, in management, I told you about Camel. I'm coming to capital adequacy. It's one of the most capitalized banks in Nigeria, and not just being capitalized, having very strong long-term stability in terms of solvency. A capital adequacy ratio well above industry level of 15%. Zenith Bank is about 25.5% in capital adequacy ratio. That means a whole lot in terms of availability of capital to defend their risk positions. So the bank is strategic, and they are working in line with the central bank rules to ensure that they lead all the parameters. People think that banks are very good only when they are big, with many bank branches all over the place. But bigness, in quote, or stability and excellence is found in that thing I mentioned earlier. Is the bank capitally adequate? Zenith Bank is very much capitally adequate, well above the industry level, even above Basel Accord level of 10%, at 25% and more. Asset quality, the bank has remained over the years below 5%. What that means is that if you look at the whole bank's total loans, the percentage that has some concern, whether it's substandard, doubtful, or loss, is not more than 4.7% in Zenith Bank. Because that is what is allowed by central bank. A bank must be below 5%. And they have consistently maintained below 5% all through their 35 years journey. So it's a bank that is looking at risk management with very strong focus, whether it's about credit risk, or market risk, or liquidity risk, or operational risk, or fraud risk, or reputational risk. They have packaged themselves and continue to manage risk in a way that the bank will remain the bank to catch in the future.
All right, Mr. Odemezue certainly came in blowing a whole lot there, information on Zenith Bank. Thank you so much. Managing Consultants and Chief Executive Officer of Flame Academy and Consultant Limited, Mr. Oji Odemezue.
Always my pleasure, to be on your show. And thanks so much for inviting me.